The softwood lumber industry is taking a hit because of significant new duties from the United States.
Canada's softwood lumber industry in the face of U.S. tariffs.
America is in effect charging for access to its economy.
Questions about his next move against Donald Trump.
We have always said that we will apply tariffs where they.
And these meetings, of course, are happening against the backdrop of Donald Trump's trade war. The impact of his tariffs is starting to hit home for many American businesses.
U.S. President Donald Trump's next move on tariffs for Canada could prolong the pain for BC softwood lumber producers.
What just happened to North America's lumber trade could cost you $14,000. And it all started with one tariff. In early 2025, tensions between the U.S. and Canada exploded after President Trump announced a fresh 25% tariff on Canadian softwood lumber. On paper, it looked like just another trade move, but within days it triggered a chain reaction. Factories stalled, prices surged, and one of America's biggest timber companies saw its profits sliced in half. This wasn't just policy, it was an economic tremor felt from Wall Street to the construction sites of suburban America. The company at the center of the storm, Weyerhaeuser, a household name in the U.S. timber industry, their second quarter profits didn't just slip, they collapsed. From $173 million last year to just $87 million this year, cut clean in half. Revenue was down, earnings per share missed expectations, and on the investor call, executives didn't sugarcoat a thing. They warned of another $60 million drop in Q3, and the reasons were painfully clear. Demand had weakened, markets were oversupplied, and the looming tariffs had made everything more expensive. From raw lumber to finished products, the entire supply chain felt like it was buckling, and yet this was only the beginning. By late July, the U.S. had stacked multiple tariffs, 25% on softwood imports, 10% on energy goods, and an updated 20.56% anti-dumping rate on Canadian lumber from 2023. When added to the pre-existing 14.5%, the total duties approached a crushing 40%. The message from Washington was clear: no more grace periods, no more delays. The August 1st deadline was locked in. Commerce Secretary Howard Lutnick doubled down, claiming this was about defending American mills from unfair subsidized competition. Even Weyerhaeuser's CEO backed the move, calling it long overdue. But backing the policy doesn't mean avoiding the pain. Weyerhaeuser, despite supporting the tariffs, still took a massive hit. Lumber and OSB prices lost traction, builder sentiment cooled, and with mortgage rates already high, housing demand started to slip. The company is trying to fight back, buying up timber acreage, investing in engineered wood, and approving a $100 million stock buyback to show strength. But even a war chest like that can only go so far when the housing market is flashing warning signs. Because while timber profits are down, home prices are headed up. In May, U.S. single-family home sales took their sharpest dive in nearly 3 years. Rising interest rates were already chilling the market, but the new tariffs sent lumber costs into a tailspin. Builders, already cautious, started hitting pause on projects. Inventory ballooned, but buyers pulled back. Many simply couldn't justify the higher prices. Analysts now warn the tariffs could add up to $14,000 to the price of a new home by 2027. And that's not just a number, that's a down payment. That's the difference between building a family's dream house and walking away. Even industry groups that support the tariffs, like the U.S. Lumber Coalition, admit the ripple effects are real. As construction slows, the impact flows backward, hitting sawmills, suppliers, and rural economies that depend on steady building activity. So while U.S. policymakers stand firm, Canada is recalibrating, and they're not just talking, they're moving. Canadian Trade Minister Dominic LeBlanc made headlines by pointing out something few people talk about. Canada holds over $1 trillion in U.S. pension fund assets. It grows by $100 billion every year. And while there's no open threat to pull that money, the message was clear. Canada isn't powerless. They've got leverage. Prime Minister Mark Carney made another thing clear. He's not going to rush to meet any American deadline. Canada's priority is protecting Canadian jobs, not reacting to U.S. pressure. And then came the twist. Canada, for the first time in decades, is now seriously considering export quotas on lumber. It's a demand Washington has been making for years. Ottawa always resisted, but now, with bipartisan U.S. senators flying in to push for a managed trade solution, Under USMCA, the idea is gaining traction. At the same time, Canadian exporters are pivoting fast. Just a year ago, 78% of Canadian lumber exports went to the U.S. Today, that number is down to 68%. More of that wood is now heading to Europe and Asia. The shift is happening in real time, and while Canada expands its options, the U.S. is doubling down at home. The Trump administration is pushing for a domestic timber revival. That means increasing federal harvest quotas by 25%, even opening up areas once protected by the 2001 roadless rule. It's an aggressive push to pump more American wood into the market, but here's the problem. Experts say those efforts might only boost the total timber supply by less than 1%. It's like trying to fill a swimming pool with a drinking straw. The math just doesn't work. Regions like Scania County, once filled with bustling sawmills, are still struggling. Supply gaps take years to close, and even if the trees are cut, they still need to be milled, dried, processed, and shipped. None of that happens overnight. To keep pace, U.S. mills are investing in automation, robotics, and faster processing. They're trying to do more with less, stay lean, stay competitive, and avoid collapse. Meanwhile, Canadian lumber companies are getting smarter. Some are setting up shop in the American South, closer to pine-rich land, lower transportation costs, and fewer trade barriers. It's a clever move. By producing inside the U.S., they avoid the tariffs altogether, and while Washington cheers on these shifts as wins or local jobs, they're also a sign that the global lumber map is being redrawn. And that brings us to the big question, what happens next? The U.S.-Canada lumber war is no longer about just lumber. It's about two competing visions for trade policy and supply chains. The U.S. is betting on protectionism, revival, and tariffs. Canada is leaning into strategy, partnerships, and global diversification. Caught in the middle are companies like Weyerhaeuser, builders watching costs rise, and everyday families wondering if a new home is even possible. This isn't just a policy debate. It's about the future of North American construction and who gets to shape it. It's about whether protectionism helps or hurts in a globalized world. And it's about how one industry war can send ripple effects through markets, neighborhoods, and homes. So, what would you do? Would a $14,000 price hike stop you from building? Do you think pension capital should be fair game in trade disputes? And should the U.S. cut more red tape for logging or protect its forests at all costs? This story isn't over. The lumber war is heating up, and every decision from here on out could change the map. Stay sharp.